Crypto markets pull back sharply as ETF inflows start to slow. Macro headwinds ahead of the FOMC have markets on edge. And the signal was in the ETH skew last week. But has it gone a bit too far? All this and more in this week's Crypto Options Unplugged. Hey everyone, welcome back to Crypto Options Unplugged. I'm Imran from Options Insight. I've got Dave Brickell with me from FRNT Financial. How's it going, man?
Yeah, good. Yeah, testing week for the
Yeah,
bulls.
these crypto markets, they keep people on their toes, right?
Yeah, they do, and it's a reminder, right, of the inherent sort of volatility in this space, and to the point that you've been making for the last few weeks about the need to have your hedges in place and
Exactly.
and the times to do that. So yeah, quite a correction. I must admit, I'm a little bit surprised, like, by the depth of it. I kind of didn't expect that, although I put out a tweet last week saying, like, anyone who's getting really bearish on this market, that the play that you're actually making is that you think the ETF flows are going to slow or even reverse. Ironically, Thursday and Friday they slowed, and then yesterday we actually had a net outflow. So it's kind of dented a little bit that demand supply dynamic, which has underpinned so far this whole move. And that's, I mean, I think that's just a temporary bump in the road. I mean, there's still, into the new ETFs, there's still really strong inflows. There was huge inflow to the BlackRock ETF yesterday. It's the grayscale outflows are still, they've kind of almost picked up steam, but we've still got some like bankruptcy related selling. And then also, I guess by its nature, there's a lot of longer term holders in the grayscale ETF. So probably taking a little bit of profit out of that as well.
What about I think I read it in your piece, is the average size of the ETF transactions has been quite small, right?
Yes, yeah. We were talking about that FRNT Financial yesterday. The average clip size has been like $13K.
But is that because a big buyer would have to split it up into smaller chunks as well?
No, I don't think so. I just think it's reflective of probably more retail, skew towards still more retail type traders. So you've not really perhaps seen like the big, sort of family offices, the bigger institutions or the big high net worths really probably coming in yet. What
are they waiting for?
I think that demographic is just typically slow. Like I just think they move slowly. Institutions move slowly. They'll look at it, think about it, but I think it's all to come. I mean, if you look at like some of the stuff that the Bitwise guys who are out sort of meeting different investors, and it's like they're all having the conversation and thinking about it. But yeah, that the institutional space, and anyone who's worked in it, myself included, it moves slowly. It does move slowly, and so I think the positive to take from that is all that money's still to come in. So I don't think we're close to to this kind of fizzling out. I think it's going to accelerate.
The parabolic move that we had from Jan, you've got to correct some of that, right? It's not healthy for those moves to be straight lines like that, right? So I think that's what we're doing now.
Yeah, and the other thing for me, certainly, from like the macro side, is to then kind of go, are there reasons for it as well? And there kind of has been. So if we look at the last week, I think when we were in the studio last week, we just had the inflation data, which again was stronger. I mean, there was, like Goldman's pointed out, there was actually a disinflationary undertone to that data. Sort of non-housing services was actually a bit softer, and we still got this shelter component that's kind of inflating the inflation numbers. That's the right way to say it. So I kind of feel like the market's gone a little bit too far with that narrative. Obviously, we've got the Fed tomorrow night. I actually think we're probably underestimating the dovish lean of the Fed. I still think everything that Powell said to this point, at least, has been that as long as the data kind of remains the data flow remains the same, then they're going to look to cut. And I don't think it's sufficiently sort of shifted up a gear for them to change that. So the market's now pretty much priced out a chunk of a June cut. So I actually think we're underpriced for cuts, and I don't think the Fed are feeling as hawkish on this market as perhaps what we're pricing. I also still think their concern right now is this debt dynamic and the sustainability of US debt. So I think as long as they don't feel inflation's sort of really like accelerating again, they're going to maintain the script of, look, we're still pretty tight here. We've still got room to cut rates. Real rates are still very high. So let's see where the Fed are on Wednesday. But I think there's scope to just take a little bit of steam out of the move in the dollar and yields that we saw over last week. That, if you remember last week, I said they'd become a bit of a tailwind because they'd corrected quite a bit from their recent highs. Well, then they shot back up after that data. So yields and the dollar have actually been again another headwind. I think they're going to top out, and if they do, then I think they become a tailwind. And if they don't, if Powell surprises and he's super hawkish, and 10-year Treasuries sell off more, and we sort of start challenging, if we start challenging that 5% level again, then we could be in for a deeper correction. But that's not my base case here at all.
I mean, do you think Powell's going to care about what's happening in oil prices and like gasoline prices? I mean, that all feeds into inflation, but is that not really the inflation they care so much about?
Yeah, because they always like to strip that out, right? So and also I think Powell's been very open about the idea that there's going to be some bumps in the road along this disinflationary path, that the move from 6% to 3% was always going to be easier than 3% to 2%. So I think it's probably all within keeping of how they're sort of viewing the world. And they're not going to react too much to, I mean, really, oil's not really gone anywhere really for a year.
Zooming out, it hasn't, but in the short term, gasoline prices are up like nearly 15% in the last couple of months. Oil's breaking out, looking quite strong technically. So it's got the traders all thinking, okay, inflation. But question is, that is volatile, right? Those energy prices. Yeah. And the Fed tends to just zoom out and say, well, that thing goes up and down. Yeah. We're not going to make our policy decisions based on that.
Yeah. We've also seen some like softer growth indicators, I guess. Like retail sales was soft. There's been some big sort of revisions to the employment data, so the labour market's not looking as strong as perhaps we thought. Obviously, not non-farm payrolls, even the wage component was softer. So I think there's plenty there for the Fed to go, look, let's certainly I would be shocked if they start thinking about hikes. We're still moving towards a rate cutting cycle. With the actual inflation data itself, that shelter component is kind of overstating where inflation's at. And has room, and it's a lagging indicator in a way, has room to sort of come out of it. So I think we're still on path in terms of the macro for it to be a more supportive backdrop.
China? What's China doing?
China, so actually I think one of the big things last week is China actually drained liquidity out of the system for the first time since late 2022.
How do they exactly do that?
So they do it. They inject basic liquidity through the banking system via these reverse repos. And last week they conducted their repos, but they had maturing loans basically that offset it, and the net injection wasn't sufficient to cover the maturing loans. Now the thinking there is that partly they're still sort of trying to maintain this currency stability. So when they start seeing the dollar rally broadly and US yields going up, I think they're getting panicked. It feels like they've got this like line in the sand almost around 720 on the currency, that they don't want to start losing control of that again, and then all the capital outflows and all that stuff. So I think there's that. But they've spoken as well about not wanting funds to just be laying idle in the banking system. So they've been injecting all of this liquidity for months, and it's kind of not feeding into the real economy. So it felt like a little bit of a warning shot to banks to start using this liquidity. You're not just going to sit on it for speculative reasons. You need to start using it and getting it into the real economy, because they're still struggling with the economy and this sort of sprawling property crisis that they've got over there. So I think it kind of felt a little bit of a warning sign. Start lending. They have injected liquidity this week so far. So again, I don't think it's a big change, but it's something that we need to look at. And so if I look back at last week, we had China withdrew liquidity. You had the dollar and yields sort of go back up. There was talk about a $1 billion trade blowing up, where they were essentially trying to short MicroStrategy and buy Bitcoin and play that spread. Probably been listening to you a little bit on the MicroStrategy thing.
Yeah.
In a way, that clearly sort of was blowing out, and the unwind on that is they need to actually buy back MicroStrategy,
which is why MicroStrategy went to 1,800
exactly
last week. Yeah.
So there's signs that, I mean, for it to be a $1 billion trade and no one knew about it, it feels a bit maybe exaggerated. But if we had that going on, the inflows sort of just slowed a little bit, and then we've had these macro headwinds kind of add it all up.
But ETH came off more than Bitcoin because obviously they reduced the probability of getting the ETF done, right? That guy from Bloomberg who covers the ETFs. Thoughts on that?
Again, I think it's more about the timing of when. So is May too soon? I mean, I've got no sort of real insight into that. But I kind of think, again, I don't think it really matters, because I think we'll just, if come May, and actually, because there are some final deadlines in May, so those applications will have to be withdrawn. So I think we'll know ahead of May whether it's going to get rejected or not, because they'll just withdraw the applications, and then we push it to the end of the year. But then again, I'm always of the view, same with the macro, it's about the direction of travel, right? So it doesn't really matter whether it's May or November or whenever it might be, as long as we're sort of moving towards that. But again, you start adding all these things up. Understandable. I actually think as well, the problem with ETH, as someone who has decent position in ETH, I think the Solana move as well, like there's probably been a lot of rotating out of ETH into Solana.
Yeah.
I think the Sol ETH cross has started to break new highs as well.
We talked about that a couple of weeks ago.
Yeah.
I didn't manage to get any on. I mean, I had some Solana, but I didn't manage to get any of that actual spread trade on, annoyingly.
Yeah. A lot of the meme coin mania is on the Solana chain. So I've even been playing about in some of that myself.
The meme stuff.
Just been getting dragged into it, just being a little bit silly.
Yeah.
But yeah, so I think there's a lot of probably rotation out of ETH into Solana as well. So that's kind of the layer one battle, if you like. What are you going to own, and people just wanting to rebalance there. So I definitely think that's weighed on ETH. But generally, I think we're okay. We had as well, Bank of Japan was this morning.
Nothing done, right?
So they hiked. So they hiked rates like 10 basis points. So they're now no longer come off of negative. So went from -0.1 to now
but
0.
The market didn't do anything dramatic.
No, and all the macro bears want to make this the event, and I get why, by the way, because if we start to see a portfolio reallocation from the rest of the world back to Japan, these repatriation flows, and Japan's the largest foreign creditor out there. So if they start selling bonds and global assets to bring it all back home, then we're in for a really tough ride and risk. However, again, I don't think a 10 basis point hike is sufficient to really kind of change the sort of dynamics around that. So I don't see this big repatriation flow. They've officially ended yield curve control, but they said they remain nimble to purchase more JGBs if yields spike. So for me, it's all one and the same thing.
This means they're going to suppress vol.
Yeah.
Basically.
So I think, and then maybe that was hanging over the market as well. Like you've seen dollar yen's rallied. So I think everyone was positioned for this. This is a risk event that we need to be cautious around. Obviously, I think there's the potential for it to be a bigger deal if they continue, with hikes and we do actually get to a situation where you see that repatriation flow. But I think it's far too early to be looking at that. It felt for me like we're tweaking things around the edges. We wanted just to kind of symbolically get off negative, but now they'll probably sit there. Japan just narrowly avoided a recession at the tail end of last year, so their data's pretty soft. Inflation's come down a lot. They've had these wage negotiations through the unions, which have been pretty punchy. But outside of that, they've battled deflation for a lot of years, and I don't really think there's much that's changed that dynamic. So, for now, comfortable with that. Let's see what the Fed do tomorrow. My expectation is that yields probably cap out here a little bit. Dollar reverses lower. inflows pick back up into the ETFs, and then we can continue the path higher. But there's been some headwinds, and I think when you add them all up, it kind of looks reasonable, the little washout that we've had.
Well, as we mentioned, the options space kind of saw this one coming. We saw Ethereum skew flip into puts. My God, it's gone a lot deeper into puts. Check out what I saw in Crypto Vol this week. Okay, so jumping into what we're seeing in volatility in crypto this week, you can see Bitcoin didn't have a great time. Had some pretty strong negative bars last week into the later half of the week. We had a 6% down day here, not very pretty on the 16th. We tried to have a little bounce over the weekend, but we have found selling again, and we've seen Bitcoin break back below 65k. Realized volatility heading down. This time last week, we were at about 80. We're down to around 70 now. So even though we have seen a 15% pullback from the highs, the realized has been coming down as we suspected would be the case in crypto markets. We often see that. Ethereum taking it on the chin as well, actually a bit worse than Bitcoin, down about 20% from its highs. See those big down days again. Realized obviously was in the 90s, has been trading back down to about 80 now. So it's still at a premium to Bitcoin realized. But in general, both markets coming down, and it looks like Ethereum's the one that's really taking the brunt of it as markets kind of price out some of this optimism around the ETF approval happening sooner rather than later. And you know, in general, the sentiment seems to be souring a bit. And if there isn't that support coming from ETFs and people front running the ETFs, we don't have a big buyer like MicroStrategy and Ethereum either. Then maybe, you know, this thing does have some more downside. Okay, looking at how the term structure is moving, obviously as realized vols come down, you're going to get front end implieds coming down as well. You can see that they're coming down by around 10 points. The interesting thing in the term structure is the long end. So we've got 6-month maturity here, but if we go even further to the end of the year, this curve keeps going up. And basically what we're seeing is a demand for longer dated Vega. So even though the front end is coming down and the curve's falling back into contango, normally you would see the entire curve shift lower and you would see the front shift by more. But we're not seeing this shift down in the long end. We're actually seeing a bid of about 4 vol points this week in the long end. Some of that is due to some call buying that we've seen in the 90k calls in September, but just interesting to see that an 80 volt implied in the back end is not getting sold. So people are thinking any of this weakness that we're seeing in the near term is just that. It's just near-term correction after a really impressive run, but the fundamental story and the narrative to take crypto much, much higher is still very much intact, and that's what people are going for when they trade those longer-dated options. All right, looking at flows, the reason I've highlighted Ethereum is just because it seems to be the one that people are a bit more bearish on. It has sold off the most as well. We did see a little bit of upside buying in the 5,000 area and some bullish riskies here. And some two-way in calls, but really you see the bulk of it is coming on the put side. We saw a lot of puts in March being bought, put spreads, etc. Some in April as well. But in general, people more nervous on Ethereum, and that really having an impact on the put skew. Speaking of the put skew, we mentioned it last week that there was a signal here in Ethereum skew flipping into puts, even though the spot hadn't really done much. That was this spike from here to here. We used that signal to take some profit on calls that we had in June. Turned out to be a good thing to do. We have seen the skew continuing to go, and even Bitcoin skew now has moved to flat in the 1 month maturity. So protection buyers coming in. The skew was a signal in ETH. It continues to push on as people are now a bit fearful of how far this correction could actually go. We look at the weekly skew on Ethereum, it's actually at about 11 vol points now, which is about as high as it's been in the last year, barring one very extreme event. So it is starting to show signs of potential peak panic. But, you know, we're going to keep an eye on it. We're not going in there and buying loads of exposure just yet. We are still pretty well hedged. And, you know, if we look at where the positioning lies, you can see the dealer positioning on Ethereum right now. We do see some short strikes around 3,500, 3,300, and then they start to get long. So anywhere sort of 32, 3,000, and even 2,800, we have got long strikes on the dealer's books. So you would have thought if we get down there, the velocity of the sell-off should slow down, that will act as some support to the market. And then if you've had any protection on, that would be an opportune moment to monetize your protection if you want to get long again somewhere in that 3,000 zone on Ethereum. All right, that's what I'm looking at this week in Vol. Thanks. All right, so what do you make of that, Dave?
Yeah, I mean, interesting, and I think I think the options market, it really kind of encapsulates what we're saying, right? Short term, a little bit of nervousness around, this sell off, a little bit of scramble for protection, but actually longer term, still a pretty positive view on sort of where we're heading, and people happy to sort of own top side sort of longer term. So yeah, I think I feel reassured, like, just looking at that.
Yeah, it is interesting. Like, I've traded vol for many years across different asset classes, and to see it like where you've got vol really high, elevated around 80 odd, the front end starts to come in, and normally curves will go back to contango, the front will reprice lower, and then the whole curve will get dragged down. But to see the long end actually going up 4 or 5 points from these levels at like 80 vol is quite interesting, right? And it really does show you that it's almost like there's two different markets. There's the short-term options market and the long-term options market, right?
Yeah.
The short-term is very high vol, can flip on a dime, but the structural long-term Vega in crypto, everyone's bullish, everyone knows the story's there, expects the story to play out, and yes, there'll be dips along the way, but it's just that's so powerful right now, it seems.
Yeah, it is, and like it would be like if you started to see that dynamic flip materially, and like you expect at times, some profits going to be taken out of this stuff. So, but if you saw like material put buying like further out, you start to think, okay, there might be something bigger going on there. But yeah, like I still feel like really comfortable in this market, and I just feel really like we've had a massive move up. We've had 15% correction from the highs. Just everything feels pretty normal. ETH kind of feels, we've got some risk around the ETFs, and then this kind of maybe a little bit of rotation into Solana. That's becoming a bit more of a rival to it now.
To be honest, Dave, if we were down 30%, I think you'd be very comfortable. I don't think there's anything that's going to shake you out, to be honest.
No, like it's funny because you do. You become a little bit like desensitized to it after a while, because like I believe in the longer story, and my thing like sort of, and part of the reason why, like, looking at the big picture, and part of the reason I think why our dynamic works quite well, because you'll imply more of a sort of shorter term trader's mindset around stuff, and my thing is to kind of keep with the bigger picture macro. I tend to have a longer term outlook. And I'm still looking at the world going, this is like, we're in my view, we've probably got another at least 18 months of this bull market like to run. We're still heading in a direction of the macro turning positive. Still got all the inflows to come in. So this is the opportunity, and it does like to it's interesting that there's signs of maybe the stress has got a little bit extreme in the options market, and it feels like sentiment a little bit, people are panicking out stuff, but it's kind of, it's just feels a very normal like bull market correction.
Yeah, I mean, the funding rates are still, I checked them this morning, the funding rates are still positive in Bitcoin. They have come down. So I think March was at like 35, it's down to about 15 or something like now. So maybe there's still a little bit more flushing out that needs to be done.
Yeah.
And if we were to get a slightly more hawkish Fed than expected, then that would probably do the job and you'd get that flush out. But like I said in the shot with the Ethereum positioning, I do think down at 3,000 there's a lot of support down there, right? So I think if we can get down there, those of you who did listen to me and get some hedges in place, I think I'll probably be monetizing some hedges down there for sure.
Yeah, and that's like it feels like we've probably like gone back into a bit of a trader's market, and this is why you go on Deribit and get your hedges on, and if like you have a sensitivity to that, then this is why you sort of cover yourself, and this is why the big institutions do as well. They have to. I have the luxury of I can kind of ride the market out, all the pullbacks and all. If you're managing risk and you're managing other people's money, you don't have that luxury, right? You have a responsibility to kind of manage your position risk and all that stuff. So So it's interesting to see, you know, how the options market has moved. It's interesting that it kind of was signalled last week with some of the particularly in ETH and that sort of move in the put skew. And it'll be interesting to see how that now develops over the coming few days.
Yeah, I mean, these divergences in skew are something that I look for quite closely, and we see it in various markets. We saw a similar story in copper recently. Copper call skew started going bid. Copper wasn't breaking out with gold and silver, and then suddenly it did. It came alive, right? Like last week. So what we really want to see, it's not that the market's not always kind enough to give you the signal to trade. Sometimes it just moves and you don't really see it coming. But what I want to see is maybe ETH another 10% below here, but we start to see put skew fading, right?
Yeah.
So we go into the zone where dealers are long. We hit that big key technical level of 3,000 and no one's chasing puts down there anymore. If anything, puts are being monetized and put skew comes often. That is a signal, time to get back in, right? And that's what I'll be watching out closely for.
And it's like all these things, like having spent like 20 plus years, like just watching price action, like it all just, you know, you have these little frothy moments, and then corrections tend to always overshoot where you think they might go. This has definitely overshot where I thought it would be. So, you know, hands up to that one. And then people then start wanting to look for new narratives. And like my job in all of this is always to think, has anything materially changed? And that's what you're kind of looking for, to go, actually, yeah, this is where it shifts. And which is why like my kind of macro outlook on the world and the way I allocate, you know, doesn't really change that often, because it's not often you get big shifts in the kind of dynamics. So yeah, I sort of feel comfortable. It's funny as well, like I think these moves kind of flush out the people that don't really believe in the big picture story. Like I've just, before we come in here, Michael Saylor's actually just raised another just over 600 million. He's probably sat there going, like, lovely, like a nice correction to buy into, because he believes in the story, like, and he's got complete conviction in the story. I sit there, just my only thing is I wish I had sort of spare cash to
more money to
buy
spend
into this.
Yeah, that's right.
But I'm like, yeah, no, this is perfect. Like, this is kind of what you want. When it's going up and up and up, people keep, you know, messaging me saying, I just need a dip to get back in, and then the dip comes,
and
yeah,
then
well,
they're too scared.
And they're like, no, this looks like it could be the end. So it's not the end. I think the options market is probably telling us it's a short-term little bump in the road of volatility, but long-term, everyone's still positioning for a decent bull market.
I'm gonna close out with a little story about my Solana position. So I started buying Solana. I think it was around $40. Started buying it, averaged into about $35, thinking, I used to trade at 200. That's a nice level. Then Luna happened, Terra happened. It went to lows of sub 10. I was down 70% on my Solana. But in crypto, that comes with the territory. So you invest what you can afford to lose. And if you invest what you can afford to lose and you don't over leverage yourself, you can hold these positions. And guess what? Now I'm 6x on my investment on Solana. Still haven't done anything with it. And who knows where it's going to go. But you've got to, instead of trading every single move and over leveraging yourself, you just got to think about crypto as a long-term game, average in, hold the coins that you believe in, and let it play out. All right, that's my key takeaway for this week. We'll catch you all next week.